So wanted to get to our next topic for the show, which is the Trump administration shifting tones. And yeah, obviously we all know what's happened the last couple of months. The idea when the Trump administration came on the scene, when President Trump was inaugurated in January, talked about tariffs, and we all knew what that meant. But I don't think anybody really realized how high these tariffs were going to be. And in fact, President himself said he's going to be a little bit lenient when he put these tariffs on. And in the end, he was nothing. He wasn't lenient at all. The numbers were a lot higher than what we thought. On April 2nd, he announced reciprocal tariffs on something like 185 countries. And I guess the game plan from President was that he was going to issue these tariffs and basically kind of have a bit of a blackout period where he really wouldn't talk to anybody about them. He would let things stew a little bit. And he had a lot of the people that are part of his administration go out and say, no, these tariffs are here to stay. This is going to make things fair, right? This is going to make things right in the world with respect to trade between the US and many other countries. And we were left wondering, is this a negotiating tactic? Is this not a negotiating tactic? And people like Peter Navarro, his personal advisor to the president, was saying, no, this is not a negotiating tactic. These tariffs are here to stay. And well, the good news is, as we now know, that that was not the case. That a few days later, the president did say, well, if a country were to come forward and offer me something, then maybe we could have a bit of a bargaining session or a trade talk, and we could come up with some negotiations. So that was the first shift in tone. I know that obviously since then there have been many other shifts in tone. We've seen carve-outs for certain segments of the market, whether it's computers or phones, or whether just recently automotive parts cut a carve out for that, because obviously the automobile companies, the GMs, the Fords, they were obviously trying to lobby the Trump administration and say, listen, we need more time. We need to be able to, if we're going to move business back, we just can't do it that quickly, and we need a little bit of help. And so the president has said that he was going to have some leniency with respect to automotive industry, automotive parts, and that will be possibly a 1 to 2 year exception, but eventually tariffs would be put back on. And then finally, this whole 90-day pause, a 90-day pause on the tariffs, again, a change in tone. But what caused that change in tone? Well, I actually mentioned it in the interview with Patty Levitt-Reed and John Chevreau, in that I think the market dictated the change in tone. I think when the bond market started to sell off, when bonds started to sell off, U.S. government bonds started to fall in price. The yield started to spike north of 4.5% on a 10-year bond. That really spooked Treasury Secretary Bessent, and I think he communicated that to President Trump. Perhaps countries are selling U.S. Treasuries. They're no longer holding U.S. Treasuries, which is not a good thing. I also think there was a change in tone when the president called all the major CEOs of retailers in the United States to the White House, the Home Depots, the Targets, the Walmarts. And I think the message was very clear that price of goods is going to go up, and it's going to go up fairly soon. There is a lot of inventory that has come into the United States over the first couple of months, but that's only going to last for so long. And I believe, this is my own belief, that probably have about 6 months worth. So sometime around the end of May, beginning of June, you're probably going to see prices really start to move higher. And if they don't move higher, well, the other fear that, or the other thing that the CEO said to the president was that either prices go higher and we on the goods that we sell, or there's just going to be empty shelves or emptier shelves. You go to a store and you want to buy a blue pair of Nike sneakers. Well, they may not have size 9, they may have size 7. Well, if you're size 9, you're out of luck. And well, if you find a size 9, but they may only have red or black, red and white, or black and white versus blue and white that you want. So definitely there are going to be some inventory issues. And again, that is probably going to start sometime in the next, well, let's say next month or so. And so these are the things, in my opinion, that spooked the president, got him to change his tone and really start to speak about bargaining and coming to the bargaining table and wanting to make a trade deal. And as I understand it, a lot of trade negotiations going on right now. There are a few countries that are very close, even a few that have already committed to a deal, which is positive for the stock market. Obviously, the big one is the trade negotiations between U.S. and China. We're hearing that they're speaking, but maybe on a low level, nothing to do with the two heads of the country, so President Trump or President Xi. We haven't heard that they're speaking as yet, but just the idea that they're speaking, in my opinion, has taken this trade war to the next phase. The next phase of the trade war is negotiation. And then I believe the next phase after that will be when we hear actual trade deals being done. So stay tuned for that. But for now, just this idea that the United States is open to making a trade deal, that has made, or at least caused, the markets to go significantly higher in the last few weeks. And we saw last week, the market went, it was the best market for best weekly returns. It's actually the second best week in the markets that we've seen in 2025. And the market didn't even go that high in the US. It went a few percent higher, but that alone was enough just to be the second best week for the market. So you can see that anything positive is going to move these markets to the upside. So let's move over to a few charts that we have here. And these charts will clearly show you how the Trump administration is done in the first 100 days or so. First chart here, percent change in S&P 500. And it'll show you here, and some of you may not be able to see the names of the presidents there. President Biden is the top line, President Obama the second, Trump 1.0, so his first term. That shows you how well he did. And then Bill Clinton shows you there, first 100 days, how he did. And then if you go down, President Bush, I believe this is President Bush Jr., the second President Bush. And you can see there, Trump 2.0. How poorly has the S&P 500 done in the first 100 days under Trump 2.0? I know the president has hinted that he's not as concerned about the markets as perhaps we all thought. I don't think that's true. I think he is concerned about the markets. I think their whole administration measures their success based on how well the markets do. So seeing Trump 2.0 fall that low has to be affecting the decisions that the president is now making. Our next chart shows US dollar. Look how low the US dollar has gone. Trump 2.0 again, the lowest that we've seen when you compare after 100 days on all the other presidents. And, when you look at the dollar, and you look at, even when you look at approval ratings for the current president, it's one of the lowest approval ratings after the first 100 days that we've seen from any president in the last many presidents. So right around, right across the board, President Trump is not really, making any friends, or however you want to say it. He's not really doing a whole lot to improve the way people think about him. Whether he cares or not, I don't know. But I know a lot of people have a lot more negative view of President Trump now after the first 100 days than they did. Remember, he came into power. He was supposed to be a business-friendly president. And obviously, according to the markets, the dollar and other things, he's been nothing of the sort. Our next chart here goes into trade between the two largest economies in the world. There it is, China and the US. And we've heard that there are ports running at 60% capacity. We've heard that imports into the United States on the West Coast from Asia are down about a third, 35% or so. So the ports are emptier. There's not as much business going on at these ports. And this is actually the container ship count. So this is departures from China to the United States. And you can see a very sharp decline that we've seen in containers coming over from China. So I have to believe that all these factors are definitely playing a part in the decision-making of the Trump administration and the president himself. And that's why I believe he has carved out a bunch of exceptions for certain sectors of the economy. And I believe that also why he gave a 90-day pause. And the question is, how many trade deals can they make in these 90 days? Perhaps he'll extend the 90 days. I'm not sure, but I guess time will tell. But for now, definitely we're seeing a change in tone, but for the better. And that's a good thing, especially for the stock market.